So my name is Carl, and since I've been a child, I've always been interested in investing. For as long as I can remember, I've always wanted to work in the areas of finance and business. So any chance I got, I tried to learn how to make money. And eventually, I applied it. I did this in the form of lemonade stands, creating my own online business, and other ways. Obviously, I was still quite young, didn't really have much knowledge because I didn't have a computer or phone where I could research and look up things on YouTube. I also didn't really have access to money. Luckily for me though, my dad works in finance, so he obviously had certain knowledge around this area, and he also was quite experienced when it came to investing. So I learned a lot through him, and he taught me the basics around investing. So around the age of 10, I invested into my first few stocks with my dad. Besides this, my dad also told me many things about saving money, budgeting, and other such topics that are important in order to invest. But now I'm older and I have the opportunity to dig deeper and research around my passion, and ultimately share this in the form of a video guide where I'll be teaching on how to invest with small budgets.
Yes. Yes.
Yes.
Yes.
Yes.
But do all students that fit my target group think the same about investing? Well, I sent out a survey to over 100 students that fit my target group. This is what they had to say.
As you can see, the majority of students are already engaged in some sort of investing, or they save money which they earn from a job or from pocket money they receive. Apart from using these metrics, I also asked the students to answer a series of questions to which they had to respond on a scale of 1 to 5. 5 being they strongly agree, and 1 being they strongly disagree. The findings of these series of questions were that over 65% of people agree/strongly agree that it's important to further learn about investing, and almost 85% of people agreed or strongly agreed that saving and investing should be taught more in schools. These results show the degree of importance and interest in the creation of such video guides that I'm currently making. When you're first starting out and learning how to get started on low budget investments, it is important to understand the basics and the fundamentals of it. So in order to get a better grasp of the landscape of the financial industry and what options may be available to you and what options may not, it is important to gain information to help you make smarter and more informed decisions which can help you progress in the journey of investments. To start off, you need to build your understanding of the basics of investments, and it is important to know the different types of investments and the differences between each of them and how they can help you achieve your financial goals. So now that you can get to investing, since you have saved money, you have educated yourself through news and other websites, what is investing and what are stocks? Stocks are one of the most common forms of investing, and they've been around for hundreds of years. To put it simply, stocks are a share or a slice of ownership over a company. Thus, the stock price corresponds to how well the company is doing and whether people buy or sell the stocks. See, this is where reading the news comes in handy. You can invest in stocks through your bank account/investing account. A very easy way for low-budget investors are vendors such as Robinhood that have no sign-up fees or commission fees. Stocks generally are medium-risk investments, as it depends on what kind of stocks you invest in. Some types of individual stocks are dividend stocks and growth stocks. Growth stocks are generally fast-growing stocks where the company's profits, revenue, and cash flow are growing at a faster rate than their competitors. These stocks are generally good to invest in the short term when bought at the right time. They can result in big wins, but they are very risky. Sufficient research is needed to get good results from investing in such stocks. This brings me to my second form of investing into ETFs. One of the safest long-term options of investing are ETFs, which are like a company that collects the money from investors and then invests it into other companies listed on the stock market. Think of it like a basket or a pool of stocks which you are investing in. Generally, ETFs invest in specific industries or a type of stocks, such as the Vanguard Energy ETF and the Vanguard High Dividend Yield ETF. As you can tell by the name, the Vanguard Energy ETF invests in energy companies, and the Vanguard High Dividend Yield ETF invests in high dividend yield stocks. ETFs are traded the same as normal stocks, and they can be bought at any time when the stock market opens. The third form of investing is index funds. Index funds are also one of the safest long-term options. One of the most famous index funds is the S&P 500. Index funds function similarly to ETFs, and they basically also invest in other companies, but they try to match and mirror how the market is performing. Since the stock market has been on a general upward trend for centuries, this is a very safe option because even if there is a recession, it is basically guaranteed that in a couple of years, the stock market will have recovered. The fourth form of investing is bonds. Bonds are one of the most common ways of investing and is an alternative route for someone who doesn't want to invest in the stock market, or even somebody that just wants to diversify their investment portfolio. So what are bonds? Basically, a bond is a loan issued by a government or company, and instead of them going to the bank and asking for money, they collect money from investors and in exchange pay them back eventually along with interest payments that they usually pay annually or twice a year. Bonds are a more safe option than stocks as they are less volatile and guarantee a more stable return. However, returns may not be as great in value compared to certain stocks. Now that I have learned all the different ways of investing, I am ready to put my knowledge to test. How? Investopedia.
All jokes aside, this isn't sponsored or is an ad.
But recently, while I was researching, I stumbled across a YouTube video which mentioned using Investopedia as a way to practice trading stocks. So since I have also acquired the knowledge myself, but I have very little experience trading stocks, I wanted to learn more about the process of investing. So I decided to spend 2 months investing into a variety of stocks, and here's how it went. Before I show you the results of my simulation, I talked to 2 people that I think could help myself and the viewers of this video get into investing. The first one is Mr. David Lee, an expert in the field and is a principal lecturer at HKU that teaches in the areas of accounting, business, and law. The second is a business major student that can give us more hands-on tips in areas such as budgeting and saving. Here's what the 2 had to say.
Hi guys, I'm here with Mr. David Lee from HKU, and he's also has lots of experience in relevant topics similar to what I'm doing. He's on advisory board for Young Investor Society, which is a nonprofit that provides financial training to secondary students. So yeah, let's get into some questions I have for you.
Super. Let's do it, Carl.
How do investment professionals identify their investment opportunities?
I think it really depends on the type of investment strategy that a particular firm or investor is pursuing. Let's say for example, both you and I may be investors in the stock market, but you may have a strategy that is very much driven by kind of price movement and volatility and like kind of market conditions. And you may only be holding shares for brief periods of time, maybe at most minutes or maybe just a day or something like that. Whereas on the other hand, I could be a very long-term investor where I'm looking at very fundamental kind of business numbers focused on the long term, and I may hold on to shares for like 5 or 7 years. And so a lot of it just really depends on the strategy that you as a particular investor are pursuing. There are ways to be successful in different strategies. So there's not a one size fits all, but I think that is largely driven by one's background and what they feel comfortable with, and then how they can apply that in real life investing.
So we kind of talked a bit more about professionals, but let's say someone who has like a very small budget, someone that's a student, someone that maybe only has a couple $100 or low thousands to invest in let's say stocks or something. What is your advice to this sort of person?
So that's a good question. I mean, I think I'll answer that kind of in 3 parts. And this kind of goes to really basic personal finance 101. One is, hopefully, if you're a teenager, hopefully you don't have a lot of debt. But in the event that you do, I would allocate whatever you can to just paying off debt. And so if we move into the next part of that, then I think it's good to have some level of, some people, if you read these personal finance books, they call it like emergency savings or whatever. But I think it's good for people, just from like their own comfort perspective, to have maybe a few months of their expenses saved up. So that could be 2 months, could be 3 months. Obviously, if you're a student, you're living at home, that cost or whatever that is much lower. But and if you when you become when you grow up and become independent, sometimes some personal finance gurus say, oh, you should have 3 months of savings in case you lose your job, or 6 months. I mean, people have these different things, but the exact time, I don't think is as important as just figuring out what's comfortable and necessary for you. The third part is, let's say you get to this point where you now have some money left over, maybe every month, or you saved up enough money where you're going to start investing. Then I think there's a few ways to approach it. I think for most, normal investors who don't have access to, say, like a Bloomberg terminal and lots of research and things like that, what the most of the academic research says is most of us should just invest in ETFs or market tracking products. So back in the day when I was younger, when I was your age, the ETFs weren't really a big thing, but mutual funds were. And so, that was the common advice then, was like, well, find a mutual fund that's kind of cheap in terms of its fees, that tracks maybe an index that you like, let's say the S&P 500. And generally speaking, S&P 500 annualized returns over the last few decades, pretty good.
Yeah,
And that way you don't have to worry about timing the market, when to sell, when to buy, all this stuff.
Hi, my name is Bruno Loeffler. I'm 19 years old and currently I'm studying in Germany. I'm at university and my degree is in international business administration. So as a student, I came across the topic of investing because my dad has always been interested and has had an interest in investing in the stock market. So naturally, as he from time to time talked about this topic, I was interested and I started to look into it myself, doing my own research online, and just slowly my interest growing. And then after a while, I started investing my first stocks as a retail investor on a retail trading platform, and yeah, just learning more and more about the subject as I gained experience. Now I'm currently studying a business, where you come across topics which are important to investing. So that's sort of where that started. I think investing is definitely not only a relevant matter for business students, it's a relevant matter for all people, because I believe it's a very effective and not even a difficult method of being able not only to save money but also make your grow your capital base. And I think it's relatively easy to understand it on a simple level, and I think everyone could really benefit from learning about investing.
On November 10th, 2022, I opened up my first trade by buying one Apple stock. I followed this up by buying several other stocks in companies such as Amazon, Procter & Gamble, Moderna, Verizon, and several ETFs. I've held on to these stocks for the past 2 months, and this brings us to today, January 6th, where we can observe the growth of the stocks and what I've learned from investing into these stocks. As you can see from my portfolio, the total value of my stocks are around $1,416. I wanted to keep this realistic for a student or a low-budget investor who doesn't have thousands and thousands of dollars. And in total,
I made roughly a $40 gain,
which is not too bad in these volatile and tough market conditions. So overall, I think my knowledge was really put to test and I was quite successful, as it can be seen that the total gains outweigh the losses. Taking a closer look, there were a couple companies that took very big hits, and there were also a few companies that had massive gains. When purchasing stocks in these companies, I try to stay as diversified as possible. So I invested in many different sectors such as healthcare and telecommunications. Staying diversified is important because if one sector takes a big hit, another sector can make up for this. Obviously, I didn't make a massive gain in the end, but you can imagine if I continued this for many years, I could compound my money so that I'm financially comfortable, especially when market conditions are much better than the current ones and are much more profitable. Overall, I think this simulation was very successful, and I hope this video inspired others that may be interested in investing, such as myself, that they can too also get into investing. So thank you very much for listening to my video. Like and subscribe. Thank you.